Cash buys you time. And that's what I mean by cash is king, right? You can continue on paying all your old creditors and all your old overheads all you like, but the cash will eventually run out. Cash buys you months, buys you 6 months to drop your overheads, redo your cost restructure, enable your business to rebrand, relaunch, and to take in another direction. So through this period, you either had a cash reserve before, which is slowly whittling away, or you're going to be taking advantage of some other resources available to all businesses. Now, in Australia, the banks have been given a backing from the federal government to take out some COVID-19 loans up to $250,000, which is unsecured, effectively the government's backing. So banks have been quite keen to lend this sort of money because the process of asking you for security is gone. Now, be careful here because the banks are still assessing whether or not the business is viable, right? You've got to be able to show that you're going to be COVID okay once we get out of this sort of lockdown period, that you are actually going to be able to repay the loan. So if you do have a viable business and you do have a future to be able to make profit and cash-free profit, the banks want to know about you. And grabbing this $250,000 COVID loan from the banks is a wonderful start. The second point that we always learn is relationships are absolute key. Be close to your creditors, be close to your customers. If you're struggling to pay your creditors, tell them, be in front of them, communicate with them, pay them money, drip feed them if you have to, right? Work together to get through this downward demand process. Talk to your customers. You got to remember, everyone's searching for cash and new business at the moment. You need to shore up your relationships with your customers. Be in their face. Be supportive. And it's what I can do for you. I think if you look after your relationships on the supply and on the demand side, when we get through this and things start to tick up, guess who's going to be your best friends when you come out? And that's what's so important about relationships. The third point is doing good work. People get lost sometimes. Always do the work. Your core business is absolute key. Doing good work always creates more work, a famous man once said to me. So ensuring that your product delivery at the moment is of the highest level will ensure that your customers aren't looking elsewhere, because everyone is reviewing their P&L. Everyone is reviewing their credit base, whether you like it or not. Don't be the one that gets caught in the cutbacks. Don't be the one that gets caught with services not up to the standard. Now, this is the toughest one. My fourth point here is we have to show some patience. We have to show that we're able to play the long game here, because things are hard to get done. Frustration will come in and bad decisions will be made. Patience here is absolutely the key. It will more likely be January and February before we see, at least in Victoria, an ability to do business properly. Everything's taking just that little bit longer at the moment. Everyone's taking that little bit longer to make a decision because of the uncertainty. But once we get a couple of months under our belt of trading, things will happen very quickly then, but we just have to be patient until the uplift ticks. The fifth point is never waste a good crisis. If you're not reviewing your own business and understanding where you stand in the business, in the framework of your market, you're wasting the opportunity. The economic has rejuvenation and a spring. Our spring is we're in the middle of winter, the spring is coming and you've got to be ready. So don't waste a good crisis. Review your own operations, review your staffing, your performance, your pricing, your margins, your overheads, your office location, because that's certainly changing in the new year, and the market you want to be. Get busy of thinking about where you're going to be in 2 years' time, not just in 2 months' time. Don't waste this crisis. It's always a great opportunity to renew. And always remember, my final point on this, I always remember that recoveries are fun. The uptick in an economy is fun. There's plenty of money to be made. Margins are fat. Banks are healthy. Everyone gets in a good mood. Don't miss out on the fun stuff. We've gone through all the hard stuff. Remember that the fun stuff coming. Just get ready for it. What do you think of that, Mel?
I think that's great. And I just love that it's able to, I'm going to admit somebody, the energy that you bring into into the workplace every day. It's just nice that I get to share it with everybody else. But I feel like after that speech, I'm like, yeah, the hardest one for me in that is always patience. Like, it's such a time that we need to be patient, and it's so difficult to be patient right now because I'm like, I just want to get to the next step. But walking in with that correct mindset, that the recoveries are fun, that the next step that we get to build, that we get to actually create something now, is really great. Yeah. So going on to actions companies can take now. Let's tell me about that.
Well, the lessons we learn are very, very broad. I've got a couple of points here I'd like to share about what's specific. What are some to-do list items I can put on to your Monday morning that can actually get this ball going? The first thing is look at your own numbers, okay? You must understand the volume of business that you're doing. We want to compare it now to this time last year and where you want to be this time next year, right? Understand the volume. And if that's not where it needs to be, we need to get very specific about doing something. Is it a new marketing drive? Is it a pricing strategy? From this review of your sales strategy, you'll understand the action that needs to go to fix it. Okay, volume of business is important. Now, if your volume of business has fallen, which is likely over this period, right, that's okay, because we as a group must adjust your cost base to suit, right? So whatever volume you may not have a lot of choice about the volume and this level of sales that you're doing in this particular market, but you do have control over your cost base. So understand when your business was performing well, what was the gross profit margin? What was the EBITDA percentages? How do I get back to that percentage? So if we can at least structure and redo your business to get your percentages back to where they should be, 15 plus EBITDA, 50% plus GP, whatever it might be. As long as you've got your structure of your business in place, then when volume comes back, you'll be able to maintain, if not improve, those percentages. So let's review your numbers right now. Let's look at the percentages of good times and bad times, and sure we, at least in these bad times, we do our best to get back to those margin percentages. That's number one. Look at your cost base and review your overheads and where all your money is actually going. Okay, that includes looking at the staffing levels. Okay, does this staffing level volume make sense moving forward and under the current environment, right? How long do we have to hold on to new staff and pay extra before the volume comes back into play, right? Where can you outsource or cheapen the cost of doing business, right? Reviewing IT, legals, accounting fees, all the above. Where can you be better? Now, if you haven't got the low fruit on your tree to be picked, to use a lame cliche, then adopt the position of at least tucking off a percentage of every line item in your overhead structure. Try and take 3 to 5% off every line, and it will add up down to the bottom to improve performance, right? This review means restructure of your spending habits based on the volume that you probably don't have a lot of control over, okay? Now, leading on to that is how good are your numbers, right? How good is the data that you've got? When was the last time we had a professional review your numbers and fix them and get them to the position that you need to make the right decisions? Garbage in, garbage out. Same applies for financial data here, right? How often are you getting your numbers looked at? How clean are they and how reliable are they, right? If you've got doubts and you're finding mistakes, then your decision making is going to be mistakes as well. Right? Clean data is absolutely vital. Now, if you're unable to get that data, and it's funny how businesses seem to struggle to be able to get the right information, even out of their own business, there's something broken within the financial reporting modeling within the business. That may be the software. It may be the person who's entering that data, right? If you're not seeing the data that you need and tailored for your business, then it's broken. You've got to remember that financial reporting is in the eyes of the beholder. The person reading it has to understand them. Every business is unique. Every business has their own drivers and understanding of their own performance. So your financial systems must tailor to exactly what you want to look at. Now, a couple of examples. People just like looking at the top line. Sales, X, tick, done, right? Others like to look at volume of actual sales activity. How many people did we visit this week? How many services did we provide? How many subscriptions did we sell? Just the sheer units and volume, right? If you're a professional services firm, how accurate are your timesheets of your professionals? That's actually the key driver to your business. How much time are you spending on projects and getting paid for, right? Identifying the actual key data that you need to make the decisions is what has to be looked at. So if you don't understand where your position is, this is where you start. Now, this is another. The next point is it's pretty unsexy here. Get your compliance with the state and federal tax affairs up to date, right? It's important that your tax affairs are up to date for a few reasons. Number one, we have had examples in our practice this year that people have missed out on JobKeeper because they hadn't lodged their activity statements for over a year. The ATO will not assist you. The federal government will not assist you unless you've got your affairs up to date and accurate. If you've got lodgements outstanding, they're just not going to help you. That's just what they're doing now, right? Second of all, how do you know how much you owe? How much do you actually, where is your position if your tax affairs aren't up to date, right? And thirdly, and probably more importantly, the banks, when looking at a business, look at the tax affairs of the business. If you've got lodgements outstanding, no. If you've got debts outstanding, doesn't matter how minor, they're going to say no, right? ATO compliance has become a key central figure for external reporting in Australia, right? Now, the government may have done this on purpose. They've got into bed with the banks. It doesn't matter. This is the environment that we have to work in now. We have to ensure that our environment is clean as a whistle, right? And the third and final reason is cap raising and equity injection. If someone's looking to do a due diligence on your business, if your tax affairs aren't 100% up to date, your sell to get them investing in your business becomes twice as hard, right? So yes, no one likes paying tax, and yes, it's a burden, but right now it's as important as it's ever been. Because if you want to play in the external market, banks, investors, whatever, these things really need to be looked after. And the final point with all this, have you addressed all the government assistance that is currently in place at the moment? Now, we all know about JobKeeper. JobKeeper 1.0 finished 9 days ago. JobKeeper 2.0 started, and there'll be 3.0 in the new year. Now, just be very clear here, JobKeeper 1.0, 2.0 are very, very different. JobKeeper 2.0, we're finding that a lot of people, even though they've qualified for the first 6 months, are not qualifying for the second 3 months, right? The testing and the rules around it are very, very narrow, very, very narrow, as opposed to JobKeeper 1.0. It just seems that the government in 1.0 just want to pump as much money into the economy as possible. They didn't really care. 2.0, it's very, very different, right? The 30% drop on the September quarter 2020 versus 2019 is harder than you think, right? Now, there is some alternative testings, but they're a little bit wishy-washy. But the 30% drop is actually quite a significant drop in business when you actually think about it, okay? So it's very, very, very hard, and they've really, really tightened up on this. So we're finding only 20% of our JobKeeper 1.0 clients are getting 2.0, but it's still worth doing the testing. It's still worth looking at your sales position. And if you didn't qualify for 1.0 for one reason, you can join the program for 2.0 and 3.0 if you feel like you need to, okay? So that is something to really consider. Business grants and other incentives. The budget, we'll get back to the budget later on in this presentation. There's some more programs out there for businesses to get involved in, mainly based around the apprenticeships of younger people. But what I'm particularly liking is this wage subsidy, where if you hire a person under a certain age who's been on job seeker over the last few months, you can actually get the government to give you some money to help pay their wages. Okay. Now, they're the more prominent and commercialized programs. There's also the R&D tax offset, EDMG grants, and other industrial manufacturing grants if it feels in your space. Okay. But there's plenty more government initiatives to come because they're going to be spending money in the government for the next couple of years. The budget is going to be in deficit for at least another 4 years, if not longer. And this is all about pumping in new economy to create jobs. So there's wonderful opportunity here for all businesses to get involved here. Okay, so have a good think about it. And if you've got any questions, we can actually help you direct you in the right direction to see if there's anything available. Okay. Mel, what do you think of all that?
I think that's great. I like how you make finance sound so normal and so understandable, which is always really helpful, especially like just listening to it. I'm like, oh, that makes sense. And it also just sparks ideas of like if companies can hire people that have been on JobKeeper or Job Seeker in the last 6 months, like that's so many opportunities to grow businesses and for free, basically. And to, yeah, I like that. Is there anything about the business grants that you can tell me about that are happening?
Well, the business grants, the federal state government here in Victoria have issued two $10,000 or $10,000 to $20,000 grants for businesses. There's further grants for the hospitality industry within Melbourne to try and get CBDs Melbourne. Think grants if you're trading in a retail shop or a restaurant here in Melbourne, you can actually go get a grant to help them set up outside dining to try and get your business up and running before Christmas. Okay.
That's cool.
The other grants, business grants, there's always a grant somewhere. And I expect that there's a Victorian state budget coming out in about 3 weeks' time, which will be more announcements about something more locally. But effectively, the grants in position now have been in position for a long time, and they're just enhancing them just a little bit more with more funding. And the criterion to apply for them have been broadened as well. They're trying to capture a bigger market of people getting involved.
That's great. And then lastly, you just said that you were going to just touch on the budget that was released a couple of days ago. And I've known that we've done a lot of work just kind of analyzing that and going through that.
Yeah.
Is there anything else specifically about the budget that you're excited about?
Well, I've got my top 10. I've found the 10 items that I loved about the budget. And now I think this is a good budget. Now, if you ignore the crippling debt we're handing our children, for a second, this is very much a case of the roof was leaking, you pay what you have to pay to fix it. And that's essentially what this budget was, okay? So the politics aside, it is a budget that we had to have. But the 10 key takeaways from this budget are as follows. Number one, marginal tax rates are cut, okay? So what they've done, they've moved the bracket of the 32% on the 42 percentile. Long and short of it, if you're on 120 grand a year, you get an extra $50 a week. I think that's that's the short of it, okay? Which is not too bad. And the idea is that they've passed that legislation today. It's going to be backdated to the 1st of July, right? So every Australian's overpaid tax for 3 months now. And that is going to wash out in the income tax return lodgements from end of next financial year, end of 2021. So commercially in your business, what's going to happen is your tax tables and calculating your payroll is going to be updated by your software provider, and everyone essentially starts getting their tax relief from the next payroll once those tax tables are released. I'm suspecting November, okay, and away we go. But that's number one. Now, remember, that's not a new thing. They were actually planning to do these tax relief in 1st of July 21. They've just brought it forward a year, okay? And the federal government, Josh Frydenberg mentioned, which I thought was very interesting, he's trying to get the top marginal tax rate down from 48 cents in the dollar down to 30 cents in the dollar over the next few years. Now, whether he pulls that off, I doubt, but I think that will actually bring us in line with international standards. And wouldn't that be swell? The second point is the asset write-off. Now, this is nothing really new here other than broadening the ability. Now, if you buy an active asset, an actual working piece of equipment for your business, you can get an instant tax deduction for it. Where in the past you would have had to write it off over 3 to 4 years, wherever the life of the asset is. Now you can get the instant write-off. Now, that's not new for small businesses under 10 mil, but it is new for businesses between 10 and 50 mil turnover. So that's quite significant. And so they're wanting you to spend money. They're wanting you to spend money on equipment, on cars, on servers, on whatever you need in your business, because that's the spending drive that the economy needs. So they've brought that in. Now, the best thing in this, number 3, I think is the best. If you're making a loss in the 20 financial year and you've made profits in previous years, they're allowing you to overlay the loss in the 20 year against the 19 profit. And if you've paid tax on that profit, you're going to get a tax refund. Okay. So this is a relatively new, and this has actually been flirted with, this sort of concept for many years now, but they finally had the guts to do it. That this overlay of this year's losses on prior year taxes, fabulous stuff. Now, it won't last forever, and it very is COVID central. They're just trying to say, well, if you've made a loss as a result of COVID, then we're going to give you a bit of tax credit back, which is very cool. More to come on that. They actually haven't worked out all the rules yet. So this is very much policy in the run. The tax office hasn't issued their ruling, so there's more to come on this, but it's certainly an exciting announcement. Now, number 4, the Job Maker program. Hiring a person under the age of 30 who has been on Job Seeker, you can get up to $200 a week to subsidise their wages. And if they're between 30 and 35, $100 a week. Now, I think this is a very exciting, very, very exciting program to get the 20-somethings working in jobs that don't exist at the moment, right? So restaurants and hospitality, in catering, and even in professional services, I think this is a wonderful opportunity to incentivize people to hire people who are currently unemployed. So that's going to be a great thing. Now, there's going to be an expansion of number 5 is the expansion of the apprenticeships programs, mainly in the construction and the skilled labour area. This is just an expansion of what's already there. There's another $100,000 apprenticeship programs, which are subsidised by the government to get apprenticeships working. Now, it's mainly based around the construction and manufacturing spaces. But if you're in that space, then getting on an apprentice has just got cheaper, okay? There's added incentives. Number 6 is the added incentive for manufacturing, which they're trying to invest in building things again here in this country, which I find a little bit strange, but that's what they're doing. And so there's infrastructure spending by the state government. So the feds have given the states more money to spend in infrastructure and manufacturing, right? So that's not a direct allocation of funds to direct taxpayers. What they're trying to do here is expand more projects of things to be done, right? So if you're in architecture, I can see you, Jane, there, right? What's going to happen here is there's going to be a whole filter of government money into schools, bridges, roads, libraries, and things like that. And that's all going to filter back through the economy. So it's not a direct reflector of taxpayer, but it's more from the top end. Now, the other exciting point is number 7, R&D. Okay, there was going to be a rollback of R&D tax credits from 43.5% of every dollar back to 30%, but they've scrapped that. It remains at 43.5%. Very exciting. There's an expansion, number 8. The first home buyers grant's is still at 10,000, but if they've moved the price of the property, it was capped if the property was worth less than 750. It's now at 950, right? That's not a very big one, but it's there. And small business tax concessions, mainly around the capital gains tax area. To be a small business, you were classified at 10 million, now it's 50 million, which just broadens the church for people to be able to access better capital gain events with relation to sale of assets or even their business. And number 10, which is the only negative of this budget, is the confirmation of the rollback of the JobKeeper program. They will not be extending it past March. Okay, as I said earlier, I'm not seeing a lot of people qualifying for 2.0, and then I reckon 3.0 will be even less again. Okay, especially if Victoria opens up in the next month or so. Okay, so that's the top 10 of the budget. We're going to learn more over the next few weeks as policy becomes law, but that's where we're at the moment. And